Okay, fam, this is going to be a barn burner. Tom Lee just dropped some bombshells on the market and projections. Don't worry about looking for the subscribe button or tapping the like button. We're looking for the coaching and Discord link. We will get to that in just a few minutes, I promise. First, let's take a listen to what Tom Lee had to say.
Let's welcome in Tom Lee now. FundStrat's head of research and a CNBC contributor with us, as you see, at Post 9. Welcome. It's good to see you.
Great to see you.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise?
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness. And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5 after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
Tom Lee had a lot of very interesting things to say, so let's go ahead and break them down little by little. $7 trillion sitting on the sidelines in money markets, and this is coming into the stock market because a lot of investors were hesitant in the previous years, and now with the Trump presidency inbound, and not only that, all of the uncertainties of the election out of the way, investors are looking to take on, I guess you could say, more risk for 2025. Tom Lee also projected finishing strong for the stock market with a SPY of a price target of 660. That's insane. I don't know if it looks that strong to me in 2 weeks, but I guess anything's possible. I would think more like 620 or 630, but you never know. Also, when CPI data comes out like it did, improving drastically, it affects mega caps as they're more sensitive to it. CPI looks like it's on a path to 2%, and shelter is cooling and in line with that. But not only that, auto insurance is down from 25% year over year earlier this year to now 13%. These are the two biggest CPI contributors, and they're both down. Right now, it's looking like Apple, Google, Amazon, Meta, Microsoft, these are strong stocks right now. Nvidia, these are going to be the big mega caps that are going to benefit, and Tesla as well. But there's something else that I want to show you guys on the screen, which is very important, and that is the 10 and the 2 yield has now inverted and it's now positive. What this means is that typically when the 2-year yields better than the 4-year, meaning the 10 and 2 yield is in the negative under the center line, that means a recession is inbound or imminent. That was likely in 22 and 23, and going into 24, it just really never happened. We were able to stabilize. The market stabilized in 2024, and as of September and October of this year, the 10 and the 2 yield are now back on track and in a positive above the center line, which basically means that we've come out of the potential of a recession without actually having one. And not only are we not having a recession, there is $7 trillion coming over from money markets into the stock market, and it's set and poised to run with small caps surging. Mega caps are getting ready to surge because of the interest rate cuts, and now the Feds are on point to cut interest rates again by 25 basis points on December 18th. When you put all of this together, we're going to have APY of 4%, and we were at over 5% just 8 months ago. We've got CPI data cooling. PMI data is getting better and expanding with services, and manufacturing is starting to expand as well. Unemployment is lower, and the economy overall is getting better. Shelter is cooling off. Auto insurance is improved. The 10 and the 2 yield is also improved. All of these things point to a better economy. Also, we know who's going in the White House. All of that uncertainty is gone. So there is no doubt the stock market will run into the end of the year. There'll be less tax sell-offs most likely, meaning there won't be as much of a pullback as there is historically in December, and January will most likely be stronger than any previous January, at least for the last couple of years. Looking at all of this data, it is pretty promising, and I'm pretty confident that mega caps are going to run between now and the end of the year. I would expect a decent run with Google, Apple, Meta, Microsoft, and Tesla, as well as Nvidia. And when you look at these stocks, you also have to look at the small cap stocks. And then on top of that, you have stocks like SoundHound, SoFi, and now Palantir that's on its way back up yet again. We are literally in a very good position. Pretty much if things keep going the way they're going, companies keep having good earnings calls, and things just keep going the way they've been going, but with a better economy, pretty much everything is going to be up a lot in the next 3 to 6 months, at least most likely. There's no guarantees, but we're in a very bullish market right now. And with Tom Lee projecting 660 on the SPY, that is insane. Pretty much means the stock market is going to go up by like 6 or 8%. That's a lot. So that's really good. But there is also something to think about. There could be some pullbacks along the way, but if you get in for the long haul, that'll be much safer. Selling put options is also safe to do, especially on stocks that you already want to own the shares on. But listen, with a 660 price, if we get anywhere near that, the stock market's going to be moving up very quickly. So if you want to get into stocks, I would really look for those opportune moments to do so. It looks like now could be that chance. A lot of stocks have moved up a lot after the data for CPI came out. If this is confusing you, what I'm talking about, PMI data, CPI data, inflation, the 10 and the 2 yield, if these things are confusing you and picking stocks is confusing and you guys want to retire, maybe you're just starting out, you want to grow your portfolio, but you don't know where to begin, or maybe you're having a rough time in the market, market, I would love to help you, fam. That's what drives me every single day, to help as many people as I possibly can. And like I've said before, I grew up in a Catholic household. Parents were hard on me, always to do the right thing and help others. That's what my dad does, and that's what I enjoy doing. He helps homeless veterans, and I help families grow their wealth and find early retirement. This way they can do what they want to do. But don't take my word for it. Let's take a listen to what my students Adam, Josh, and Shane had to say. What stood out to you the most when you originally signed up for the Discord and the coaching really gave you the incentive to want to join? And do you still feel the same way now? And what would your message be to others that are, in the same situation?
You were more focused on like the actual strategy of things as opposed to, pushing a particular stock or trying to almost trick people into how they can get rich. I'm also a masterclass student as well. And that's where I really took things to the next level. For anyone who's thinking about joining, is anyone can do this. It's just really putting in the work and the effort to meet Corey halfway, but he will definitely get you there. I started with about $300,000 portfolio. Initially saw about between 60 and 70,000 within my first 6 weeks, which I was very excited about. So now I'm really, really excited to share that I've grown that $300,000 portfolio to well over 500,000. I'm definitely reaping the rewards now. Don't wait. I honestly can't thank Corey enough.
So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on, I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up 6.4 thousand.
You went from day trading to my course, and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. And, just 1 month, it blew away, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already in stocks. And now I'm up to 75,000.
So you heard my students, Josh, Adam, and Shane had to say, this could be your success story as well. Whenever you guys are ready, I would love to help you. The link is in the information box below. Investwithcorey.com. Click on training, watch the video, and then book a call with my team and I. This way I can help you achieve your goals. And I'll see you guys when you are ready to join. So here is the 10 and 2 yield. You can see that nearing the middle of 2022 when the stock market started pulling back, the economy got pretty rough. The 10 and 2 yield was inverted. This was a sign of a recession, but it got a little bit better as we got in the beginning of 2023. But then midway through 2023, it kind of pulled back more in the negative again. But things started really improving at the beginning of 2024, as you guys can see by the graph. And as we made our way through 2024, July and August during that pullback, things got a little bit better after the pullback, and right around September, October, we have now went above the center line of zero. So the 10 and 2 yield are on the proper side, and things are looking a lot better. It's starting to look more like it did in 2020 before the pandemic. So you can see this is right before the pandemic. We are right about on par with pre-pandemic 10 and 2 yield on the Treasury. So this is a very, very good sign. So we're looking at the SPY right here, and it looks like it is on par in an uptrend. 10 crosses over 20. They both cross over the 100. Lots of good news. We could have some bullish momentum into Christmas. We could see the price up in the 615, maybe 620 range on the SPY. This is a perfect opportunity to get into SoundHound. SoFi has trended down, and the good news today, it's broken above the 100-day. So SoFi is likely to consolidate and work its way up slowly. I would anticipate that this week it'll be working its way back to 16, but it is possible going into Christmas we could see 1650 to 17, maybe even a little higher. And these are two great stocks to own. If you guys want to sell puts and make money, it is the best way. I have many puts for sale on Tesla right now. I have 350, 360, 365. I have 370s, and today I'll probably sell 2-day out of the money 390s to make more money. Probably gonna make about $1,000 this week on Tesla and about $2,000 or $3,000 on other trades depending on what I open up tomorrow. So it'll be a decent run this week. If I repeat this next week and the week after, it'll be like a 12%, 15% month for me. So could be anywhere from 10,000 to 15,000 or more just on my small challenge account. And this is what I teach in my Discord. I teach all my students the same way: save consistent passive income. And right now, that's what I'm doing. I'm selling puts on different stocks because they're going up. I sold 78 puts on Nike, and so did my Discord, and the stock came down when I did this. So a lot of premium, and now the stock is back up to 78, 72. Puts are out of the money, but it's a lot of premium. I'll make about $700 or maybe a little more than that just on the handful of puts that I sold on Nike. And with a bullish market like this, you can find the bottom on certain stocks like Nike, for example, 76, 77. Sell puts, earnings go well, and all that premium is yours. I try to stay away from selling puts on certain stocks around earnings. You got to be very careful. But we are in a very strong market going forward. I have 430 puts on Microsoft as well as 435s. I have Bank of America calls. $47 calls are in play right now. And Palantir, a lot of puts, 65, 66, and I sold some 68s. So they're likely to expire worthless tomorrow. One more day to go, and all these premiums are mine. So in this kind of a market, you find your favorite stock that you want to own and you sell puts at a fair price and a good delta. Recommended in this market, you could get away with 30, but to play it safe, you could do 15 to 20. But it's up to you to gauge what price you want to enter these stocks. But it's the perfect time to sell puts, and I really, truly recommend looking at SoundHound, Palantir, SoFi, maybe even Serve Robotics and Enovix, American Superconductor. These are good right now, and even American Airlines for someone who has a smaller portfolio. If you have a bigger portfolio and you want to get into mega caps, then right now Nvidia is looking pretty promising. Tesla's already up there, so I would maybe take a step back from Tesla, but you could really get into Amazon or Meta because they've had a lot of good news, and as well as Nvidia because they're down. So these are some good mega cap stocks to look at. Apple and Amazon are always good, although I prefer Walmart over Amazon. Apple is great. Don't worry, guys. I have a video coming out on my top 5 stocks to buy before January. If you guys want to see that, comment below and let me know you want to see it, and I'll get it out for you. Don't forget, you guys can sign up for the Discord and the coaching at any time. InvestWithCorey.com. The link is in the information box below. Click on training, watch the video, and book a call with my team and I so that I can help you achieve your financial goals and dreams. We'll see you guys on the next upload. Take care of yourselves.